Good morning, everyone, and welcome to the European crossover webinar. And pulling up some data in here. We do have some UK data at the bottom of the hour, and then also Eurozone retail sales. Also, we do have the ECB meeting, which is going to be the bigger mover, although we did get Merkel and her counterparts to agree on the amount of aid or total amount. And so we'll see whether or not or how much that's going to be impacted. We did see yesterday, talked about this in the chat room. We saw a nice little gravestone doji on the close. It was right there, 1236. We're now just under 112. So some continue to follow through on that gravestone doji and the euro on the 2-hour chart. As we move into the States, we'll also have jobless claims and then Canadian trade balance. And it does appear like so we've got the S&Ps just gently sliding back a little bit. Take a look here. I don't even know what we made. Well, yeah, right there, just ahead of. We were actually dipping just a little bit before the close, not very much, and then we got the Merkel headline that caused him to quickly jump up, and then we saw a decent little fade coming back into support around 31.17, a little bit of follow through. One more in the Asian session, move up here to 31.27. And from there, we started to slide a bit. So we may be seeing the first inklings of a little bit of a give, because pretty much even during the European session, it's just been, just go, 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 go on the way up. So we're seeing that here. We'll take a look at the NASDAQ. And you can see here, we did make it up to that key level we're looking for, which is 97.17. We actually just went just a bit above it. We're not too far off of it, though. Look on the 10-minute chart here. Just a little bit of a dip here. And then on the YM, same thing here. And boy, did we make a pretty good run up in here. So we may be getting just easing a little bit off. We haven't done anything dramatic, but we are starting to see where, like I said, in the during the European session, we just keep on motoring higher, and finally just a little bit. So maybe once again a little bit of a pushback. We do have NFP coming up tomorrow, so there we go. So maybe just a little bit of a give back. Although when we look at the high yield index and financials, financials are still trying to push higher, as is the banking index. It's kind of use those as a little bit of a gauge as to whether this thing still has some more strength. But like I said, we are kind of easing back just a bit here. And with that, we'll go and take a look at the news. Australian and New Zealand dollars take much needed breather after uphill race. The Australian New Zealand dollars hit a setback on Thursday as the sheer scale of recent gains tempted speculators to book profits, though analysts were revising up the outlook for both currencies as investors globally rediscover risk. The Aussie pulled back after scaling a 5-month peak of 69.82 on Wednesday. It was still up 3.3% a week so far and a long way from the 55.10 trough touched during the chaos of March. Near-term support comes in at 68.57 with resistance at 70, and the Kiwi eased to 64.18 from Wednesday's 3-month top of 64.44, but again was 3.4% higher for the week. Improvements in key fundamentals drivers have driven AUD and Kiwi higher, said Ray Trill, head of FX strategy at NAB, citing cash and citing strength in commodity prices and gains in world stock markets as more economies reopen. Some overshoot in recent days suggest near-term consolidation ahead of further gains through the second half and into next year. NAB now forecasts the Aussie at 68 for June, up from 62 previously, 70 by September. The Australian data out on Thursday underlined the economic damage done by the coronavirus lockdowns in April. The country's success in containing the virus meant markets were already pricing in faster pickup ahead. Figure showed retail sales sank a record 17.7% in April, with collapsing consumption certain to cause the deepest recession since the Great Depression. The country's trade surplus also narrowed 16% in April. The global rush to risk was finally enough to shake the bond market's recent equanimity and lift 10-year bond yields to 1.01 from 0.90. The damage was a lot less on the short end as the Reserve Bank of Australia remains committed to keeping the 3-year yields around a quarter basis point. Seeing the euro holds firm as the market bets on ECB stimulus. The euro held near the multi-month highs against its peers on Thursday as expectations for the European Central Bank will expand its bond buying program late in the day to shore up the coronavirus-stricken economy. The euro's strength helped to push the dollar's index against a basket of key currencies to the lowest in nearly 3 months. The euro stood at 12.20, down slightly on the day after having risen to 12.58. Against the Japanese yen, the common currency rose to a 4.5-month high of 22.62. The European Central Bank is widely expected to increase the size of its $750 billion Euro Pandemic Emergency Purchase Program known as the PEPP. The ECB delivers its decision at 11:45 GMT. The currency has been bolstered by hopes for the European Union's wide fiscal support measures after Germany last month threw its weight behind the idea of a European Union recovery fund, breaking away from its long tradition to resist moves towards the fiscal integration in the currency bloc. I suspect the market has already priced in an increase of about $500 billion in the PEPP in the near term. There is a risk of a correction, said Masafumi Yamamoto. The market could react positively if the ECB expects the target of its bond purchase or scraps its limit on each country. But in terms of the total size, it's hard to expect a positive surprise now. The dollar index stood at 97.45, having fallen about 1% for the week, as broad improvement in risk sentiment underpinning the reopening of the economies globally reduced the value for the allure for the greenback. On Wednesday, the data showed U.S. private payrolls fell less than expected in May, suggesting layoffs were abating as businesses reopen overall. Through the overall economy's recovery from the COVID will be slow. Optimism on economic reopenings and recoveries continue to dominate the market despite social unrest in the United States and brewing diplomatic tensions between Washington and Beijing. The safe haven yen has also weakened during much of this period and was also traded at 108.96 yen, near a 2-month low of 8.98. And I think they mean 2-month high. Sterling was changing hands at 125.67. to the cable near its strongest in more than a month, helped by signs that Britain might be willing to compromise on sticking points on Brexit negotiations. Britain is expected to indicate flexibility of the fisheries and trade rules if the European Union agrees to lessen its demand regarding regulatory alignment and fishing access. The Times newspaper reported on Tuesday as a new round of talks kicks off. UK has until July 1st to ask for an extension to the current transition, which ends in December. Market sentiment is still risk on, but I have the impression that in some currencies, such as the Australian dollar, the rally is a bit overheated, said Hirohishi Morimatsui Matsua, director of MUFG Bank. And checking to see if they have, so they do have it. The morning bid. So just a real catch on this. The beleaguered U.S. dollar gets some respite on Thursday as Wednesday's ADP survey showed 2.8 million jobs being lost for far shorter forecasts of 9 million lost. And the ISM manufacturing PMI also beat estimates, though it continues to show a contraction. Neither data set would be considered decent under normal circumstances, but the market moves away how starved investors are for evidence of a turnaround that could justify current elevated market valuations. The U.S. weekly jobless claims are also expected to recede Friday, but an analyst 44 countries by economists of Deutsche Bank puts the U.S. economy the second worst in unemployment relative to its 10-year average, behind only Colombia. For currency markets, it's a long-term negative for the dollar, but even if the short term, the prospects don't look good. The latest Reuters poll, over 60 analysts predicts the dollar will weaken over the next 6 months. Hopes of the more stimulus has widened the chasm between market valuations and the real economy. Despite expectations of a slow economic recovery, growing concerns over U.S.-China tensions, several unrests. On Wednesday, the Federal Reserve widened its municipal liquidity program to include more businesses, and Australia offered a stimulus package for construction. Major U.S. stocks ended higher on Wednesday, with the S&P and the Nasdaq near their record closings on February, and 10-year U.S. Treasury yields approached a 2-month high of 75 basis points. At a price-to-earnings multiple of 22, valuations of the S&P are at the highest level in more than 2 decades. Although investors remain surprised at the stock market's resilience, a case can be made for stretch valuations. A risk-free rate for valuing the future streams of corporate cash flow is essentially zero, as central banks support virtually every corner of the bond market. And then there's the ECB. Pressure is growing on policymakers to deliver more stimulus in the face of the record rate of economic contraction in the first quarter. Interest rates are widely expected to remain unchanged as a deposit rate of minus 50 basis points, but many economists expect the $750 billion Euro pandemic emergency purchase program to rise by 500 billion euros. The German coalition government agreed overnight on a $130 billion Euro fiscal stimulus program for its economy after a recovery fund proposal last week by the Europe gave struggling Euro a shot in the arm. So there we have it. And we're going to move on to the analysis. You can see here what I was referencing here with the euro. You can see that gravestone doji here on the 2-hour chart. And we have seen a pullback from that level here. Not a whole lot, but a pullback of about 30 pips, 35 pips. So the euro drove above 12 even, extending gains to 12.50. Resistance for Thursday will be 12.85 with support at 11.56. So it's going to be pretty hard to out of these gains. This has just been one heck of a rise here. But nonetheless, with ECB day, maybe we can push up a little bit higher, but a respite certainly would be within norms, I would think, at this point. But it's going to be 12.85 and 11.56. I'm not sure how much more they can do now that Germany even agreed, that stimulus. So how much further we can go and push without expecting some form of a respite, but we shall see. Moving on to the cable. Cable challenge weekly level 2602. We talked about that. So we highlighted that. Look how this goes back. I mean, that's a huge weekly level. Look at that. So the cable challenged that weekly level 2602 and pared back slightly. Support will be 2463 on a pullback with resistance still remaining at 2602. So we had 2602 yesterday. So we're looking for a pullback potentially of 2463. The Aussie posted a medium-legged doji on Wednesday, suggesting a pause in the meteoric uptrend may be upon us. Resistance will remain 69.75, which they tagged the other evening. We'll pull this up here. Actually got above it, but I mean, they did tag it. I think they made it up to what, 69.87 or something like that. But anyway, we'll continue to be 69.75 with supported 68.31. The Kiwi push for another solid close on Wednesday. Resistance for Thursday will be 64.61 with support at 63.57. This hasn't given much at all, so resistance will be once again 64.61. With support at 63.57. It may seem that this is a little bit ways back, but we're once again expect at least a little bit of a pause. If we do get that, once again, as far as we've come, 63.57 isn't asking for too much. That's what I'm saying. If you're looking intraday and thinking, well, it's trading so tight, that might be a little bit too far away. But once again, like I said, look at this run we've had. So on a pullback, that'll be your first line of support that we're focusing in on. The dollar CAD continues to languish at the 35 area. Support will remain the same at 34.65 with resistance at 35.64. So there's no change here. 34.65, 35.46, and we're just simply languishing here at 35. We're just not even moving. And it has endured a pretty good fall for that area. So the dollar peso formed a small hammer at the key level of 21.54. Support will remain the 21.54 with resistance at 21.90. Actually, we've actually tagged that 21.90, gotten up. Actually, looks like we've made it to what, 21.98. We'll stick with this 21.90, 21.54. See if we can hold this area here. We're currently at 21.85, and we had our resistance. We're looking for 21.90. Remember, that was support on the way down, had been there, so it would make sense to come up there and goose some stops a bit above it and then pare back just a bit. Moving on to the dollar yen. The dollar yen challenged and closed at resistance level of 8.96. That was our bias chart resistance yesterday, so it did stop it, but it closed right on it basically. Major resistance comes in at 9.33. You can see that big old red level here, right there, which is before. I was just going to say, which before we had is our pivot, which we had from long before 9.33, 9.27. But we did adjust that when we came to see here, all the way this low. So let me go on and I knew it had been adjusted some time back. I know I still had March at 27, so hold on. It's actually 33. The longest time it was, this is 27, and was you adjusted it back, you can see here it was essentially 33. But anyway, the dollar yen challenged and closed at resistance level of 8.96. Major resistance will come in at 9.33. A break and subsequent close above that would send the pair to 10.07 in quick order. Support is going to be 8.26. Well, we might have to adjust the 8.26, but the 9.33 is huge. Remember that previously is the old 9.27 that's been in place for a long time. But it's going to be 9.33. And we are breaking out now. I think we do have to switch this to bullish because we've had 2 days breaking above. So, and support may be asking too much to go all the way down to 8.26. Let's go right there, which is, oh. You know, we'll just stick with that. 8.26 seems a bit rich on the downside. You see this level right here, that comes in at 8.31. So we'll go with 8.31. On to the cash dollar index. So the pressure remains on the cash dollar index. The next level of support is going to be 97.15. Well, actually, we just about got there. Holy smokes, 97.19. Is 97.15 with resistance at 97.89. So we'll go with the 97.15. Not that I expected to get there, but this is going to be the resistance, which would be 97.89. And we're a little bit of a ways from there. Well, not too far. Actually, we've rebounded a little bit, but it'd be 97.89, which is previous support. And moving into the cross rates. Well, QEN continues to press higher here. We had 69.74. We even got past that. So you can see some touches coming in this level here. We're just going to go with the levels, which is going to be 70.29. but this has had a pretty good little run here. Continuing strength of the Kiwi combined with weakening of the yen has really pushed us even further. We'll go with the major level here in case we do see that pullback. What we would expect support to come in, which would be 69.01. And let's go on into the euro yen. You can see we made it up here to 22.64. We had 22.24, so this is continuing to just push the limits, but it did make it up there to that key 22.64. You see that significance here. Look at that. That's huge, 22.64, and it made it there. But let's see if we can't get a bit of a pause now. Support to start with is going to be 21.38. And moving on to the euro wad. Well, a little bit of follow through to that little hammer that we had yesterday. The odd is open to weaken a little bit, although we may see the euro also come off a bit from its highs. So this is going to remain the same, 60.91 on support. If we do see that pullback, and we'll keep the 62.97. It's definitely still bearish. Let's go on and move into the euro Kiwi. At least we're making a bit of a stand here, but that's going to be support right here with that level, 74.09. And resistance is going to be yesterday's high, which is going to be right there, 75, 70, 75, 72. With that, we're just going to move into the UK, into the cable right now as we get the UK data. And affecting 29. $28.9, so essentially just right there, and not really a whole lot of movement. Not really much movement at all. Moving into the ASEAN. This is still pushing a little bit higher. But we do have a resistance level right there. I'm going to stick with this one, which is 75.51. We actually had 75.72. Which the highest was 75.78. So, okay, we'll stick with this 75.72. Certainly the odd may want to take a bit of a pause, although we have seen the yen continue to weaken, which is keeping up the bid. And support, we'll stay with this 74.34. Only if, like I said, if we're going to weaken a bit here, that'll be where we'll look for some support to come in there. But a very, very tight range at this point. But that's after a pretty good run here. See if we can't weaken just a bit. From there, we're going to move into the guppy. And resistance is going to remain the same here at 37.14. You can see this level here. Significance of this 37.14. And that's held the market in check. So we'll stay with the 37.14. We support at 35.83. And we'll stay with 35.83. So no changes here on the guppy. And lastly here with the sterling odd, well, we're still hugging the lows here. So once again, no changes here. You can see the significance of 88, 80, 89 here. See a lot of volume coming in that level. So although we did dip a little bit below it, it's still going to remain 80, 89. And resistance is going to be 82.94. We did make it, looks like we made a little bit of run here, but it's going to be 82.94. Obviously still bearish. That's going to wrap up the FX. So we'll take a look at gold. Saw a pretty good fall here. That's 1734. They tried to make a stand there. Look at that. We mentioned that yesterday. You can see here. They tried to hold it. And then we did run into it looked like a little bit of a gravestone doji here. And then we broke. We tried to hang on. Look how they tried to come back up to it again. Even got a hammer bottom. Looked like they tried to make it look like, okay, they just ran the stops. Now we can try and put a low. Once they plowed through that thing, it was just all heck broke loose. Now trying to hold at these lows. Crude oil in turn, I don't even get this market. It's just so manipulated between what the Saudis and the Russians do. It's just, I don't know why anybody would trade this. I talked about this yesterday. It's all one direction, basically no give back. Same thing on the upside, and then I did see, a couple of notable crude traders yesterday asking, what's going on here? Well, and then when you look on here, it didn't look like a lot, but when you look at it on the book map, you can see where they just ran it down, then they ran it back up, then they ran it back down. I mean, it was just pathetic. People just got worked yesterday, even though it seems like it was in a tighter range. They just worked them like nobody's business. Taking a look here with SPOOs, we are just kind of testing this 3107 area here. Looks like we may have finally reached an area where we're getting a little bit of a pushback here. We talked yesterday about 3117 area here. Beyond that 3107, we got up there and the market kind of stalled in that area. Then we did back, then we pushed above there to about going into the close around 3125, 26. And then we started fading back, and all of a sudden the Merkel news came out with the stimulus recovery agreement. We jumped up real fast, took out the stops, came up to around 31.29-ish, 28.5, something like that. And then we quickly started to fade back towards 31.17. And later on, we dipped down to 15, down to 11. We rallied back up to about 27. And since then, we're pushing. So it looks like this market may be starting to exhibit some signs of fatigue at this point. One of the things that I shared that in the chat room. We've seen, I saw where the markets have done so well. One of the things that they're hanging on their hats was that a second stimulus program may be done. And now it looks like there may be a room for pause because the Fed expanded its liquidity to include municipalities. That takes a little bit of the potential out, which I mean for the necessity for an immediate push for a second stimulus. And we're also seeing a lot of opening across the country. That takes us away a sense of that sense of urgency. So that may allow this market, once again, I'm just combining different things. Not only did you have China not allowing for some package airlines to come in, but also on the U.S. side, banning a lot of flights, and it just keeps ratcheting up, which the market had been ignoring. But one of the things that was I had seen that they were really hanging their hat on. Well, it looks like a second stimulus program is coming. It's coming. It's coming. Now, this isn't a matter of, well, Congress is stemming back. No, the Fed actually stepped in with additional support for municipalities. So, yeah, that kind of helped it. But then that takes away the urgency for the second stimulus program, and we're reopening. So, once again, like I said, I'm just looking for areas where you may start to see this thing soften a bit. Doesn't mean the top's in place, but you're starting to see that here now. As I think some traders that have been wildly long may have stepped in and said, you know what, good place to go and lock in those profits. And maybe we'll start to see some two-way action. We do have NFP tomorrow. We'll see if maybe that may make one more dash up there, if it's not as bad, and then maybe that may lock it in. Then from there we start to pare back. We shall see. But that's where we stand on this. Thanks for joining us here with the European crossover webinar. I'll see you in the chat room.